Let me tell you about your grandfather. He worked one job. One. A factory job. Maybe a trade, maybe something at the post office, whatever. He did not have a college degree. He probably married young and had kids right after. He bought a 3-bedroom house in his late 20s on a single income, while your grandmother stayed home with the kids. He paid off that house, sent 2 kids to college without ruining his life, retired at 62 with a pension, traveled a little, left the house to your parents, debt-free, with equity that had tripled over 40 years. Your parents, they had it a little harder. Both worked, took on some debt, but they kept the family home going, or bought their own, or sold the family home and rolled it into something bigger. They still retired okay. Maybe a 401k instead of a pension, but the house carried them. Now look at you. 2 degrees, 2 jobs, a credit card balance that will not die, rent that eats half your paycheck. No savings, no house, no equity, no plan, and an inheritance situation that somehow turns into the nursing home took everything, or dad refinanced the house in 2008 and now there is nothing left. 3 generations, 2 generations of accumulation, 1 generation of total collapse. How the hell did that happen? And more importantly, is it your fault? People love to tell the story that boomers were just smarter with money. They will tell you boomers saved more, worked harder, avoided avocado toast, and lived within their means. And sure, some of that is true. The generation raised by Depression-era parents did have a cultural relationship with saving that has mostly died since. Fine, but that is not why they built wealth. That is the moral wrapper they put on top of what was actually happening. What was actually happening was the luckiest economic accident in American history, and an entire generation got to ride it. Look at the numbers. In 1990, the median American home cost 3.2 times the median household income. Today it costs 5 times the median income. For someone in their 20s or early 30s, it is closer to 8 times their annual salary. Between 1990 and 2024, median home prices went up over 400%. Median household income went up less than 200%. Do that math out loud. Homes more than doubled in price relative to wages in one lifetime. Your grandfather bought a house for 3 years of income. You are being asked to buy the same kind of house for 8 years of income. And then people sit there on TV and ask why young people are not getting on the property ladder. What ladder? The ladder is gone. It was replaced with a wall. And the housing thing is the headline, but it is everywhere. College tuition is 9 times more expensive than it was in 1989. Healthcare, childcare, groceries, insurance, everything that was background noise in your grandfather's budget is now the entire foreground of yours. Your grandparents were not financially brilliant. They happened to be alive during the only stretch of American history when a single average income could buy a house, support a family, and build wealth without any special skills. That window closed. It closed on you specifically. And nobody told you it was closing, because the people who closed it were busy making money off the closure. Let's talk about what actually happened to the inheritance. Here is how the story is supposed to go. Grandparents accumulate wealth, they pass it to their kids use it to buy homes or start businesses or educate their own kids. The cycle continues. Wealth compounds across generations. Families stabilize, communities stabilize. That is literally the point of generational wealth. It is supposed to accumulate. Here is what actually happened instead. Your grandparents' equity got eaten by medical bills, or a second mortgage they took out during the 2008 crash, or a reverse mortgage sold to them by some predator on daytime TV, or a nursing home that legally stripped the family home to cover Medicaid spend-down requirements, or a scam, or a long, slow retirement where the 401k ran out 3 years before the body did. In a huge number of American families, the wealth your grandparents spent 40 years building got vaporized in the last 10 years of their lives by a healthcare system designed specifically to do that. This is not an accident. This is not rare. This is the design. The American healthcare system, and the long-term care system in particular, is essentially a legal mechanism for turning middle-class family wealth into hospital profits before it can reach the next generation. End-of-life care alone consumes around 25% of all Medicare spending. Private long-term care can run $100,000 a year or more. Nursing homes will legally require you to sell the family home to qualify for Medicaid coverage. Your grandmother's hospital bed cost more per night than a hotel suite, and the bill followed her estate into the grave. Meanwhile, the wealth that does survive and actually transfer, it is not going to most of you. The top 10% of households will receive 56% of all generational transfers. The bottom half of households will receive 8% combined. If you remove the top 10% from the calculation entirely, the median inheritance for the remaining 90% of Americans lands at basically zero. So when financial pundits tell you about the great wealth transfer of $84 trillion from boomers to their heirs, understand what they are actually saying. They are saying that most of that money is moving from a small number of wealthy boomer families to a small number of their already wealthy children. You are not in that calculation. You were never in that calculation. The rest of us are getting the medical bills and the empty house. Here's the part that really stings. Even if you do everything right, even if you work harder than your grandfather ever did, even if you get the degree and the job and the discipline, the math is not actually in your favor the way it was in his. Your grandfather's pension was guaranteed. Not invested, not market dependent, guaranteed. His employer promised him a specific number per month for the rest of his life, and they had a legal obligation to pay it. That is gone. Pensions basically died in the 1980s and 90s. In their place, you got the 401k, which the investment industry sold to America as empowering you to manage your own retirement, and which in reality means shifting all of the financial risk of retirement from the company to you while they pop the savings. Your grandfather's health care was largely covered by his employer, cheaply, often for the whole family, because the cost of health care was a fraction of what it is now. Yours comes with a deductible the size of a used car and a monthly premium that eats what you would have otherwise saved. Your grandfather's house was the family bank. Property appreciated year over year, reliably, in basically every market. When your grandparents wanted to move or retire or help a kid with a down payment, the house was there. You cannot buy the house that would appreciate the same way, because the entry cost is now 8 times your annual salary, which you also do not fully take home because of stagnant wages and aggressive taxes. Your grandfather had a union, or he knew people in one, and because unions existed and had teeth, wages for non-union workers also went up because employers had to compete. Union membership in the private sector is now about 6%. Employers do not have to compete for your labor. They have to pretend to. And to top it all off, you are carrying debt your grandfather never imagined. The average millennial is carrying student loan debt, credit card debt, and a car payment totaling tens of thousands of dollars while earning a median wage that, adjusted for inflation, is barely higher than what a bachelor's degree earned in 1990. $58,000 then. About $60,000 now, adjusted for inflation. After 35 years. Almost no real growth. That is not a stagnation. That is a robbery conducted in slow motion. The system did not become neutral and leave you to figure it out. The system was actively restructured between your grandfather's career and yours to transfer risk from institutions to individuals and to transfer wealth from labor to capital. That restructuring has a body count, and you are looking at it in the mirror. Here is the ruthless ending. Nothing about the structural situation you're in gets solved by the people in charge, because the people in charge benefit from it being exactly this way. The housing market is not broken. It is working perfectly for the people who already own homes, for the private equity firms that bought up hundreds of thousands of single-family homes after 2010, for the landlords collecting ever-rising rents, and for the banks issuing mortgages at inflated prices. They do not want prices to come down. A crash in housing would wipe out their portfolios. So the policy response is always to prop prices up, never to bring them back to something an average worker could actually afford. The student loan industry is not broken either. It is a $1.7 trillion asset that generates consistent payments from millions of people who legally cannot escape it through bankruptcy. You cannot default your way out of student loans. You die with them. Lenders love this. The federal government loves this. The universities that hiked tuition 9x since 1989 love this. The only people who do not love this are the people writing the checks. The healthcare system already profits from the estates of dying boomers. The 401k industry profits from the fees skimmed off of your retirement every year. The lobbying industry profits from keeping all of this exactly the way it is. And every 4 years, both major political parties run candidates who promise to help you, funded by donors who made their fortunes on the systems those candidates are promising to reform. So nothing structural changes. A few tax credits get introduced, a few rhetorical bones get thrown. The fundamental architecture keeps running. The point is not to make you give up. The point is to stop blaming yourself. You are not financially irresponsible. You were handed a rigged game, a broken map, and a pile of debt, and then told that your failure to build wealth the way your grandfather did proves something is wrong with you. Nothing is wrong with you. Something is wrong with the game. 3 generations. One built wealth on a single factory income. One held on the most of it. One is holding the ashes and a Sally Mae bill. That did not happen because you were lazy. It happened because the system your grandfather accidentally won was systematically dismantled starting in the 70s, replaced with a system that extracts wealth from workers and funnels it to asset holders. The numbers are public. The policies are documented. Every piece of this is on the record if you look at it honestly. You did not lose the family fortune. The family fortune was taken, slowly, legally, by people who will not remember your grandfather's name. The first step is knowing that. The second step is what you decide to do with that information. Subscribe if this channel is making you see clearly what the system has spent 40 years trying to blur. We are not done.